Hey guys, I'm here with Ian from All Star Charts. We've talked to Ian a couple times now. Definitely looking forward to just catching up with him on the markets. I have been posting random stuff lately, but I wanted to get another conversation on here. Looking for more people to hop on. So if anybody has any ideas, please shoot me a message or whatever, because I'd love to start doing these a little bit more again now that I can. And we're basically talking through a couple things today. We're going to go through Bitcoin, COTs, dealing with client relations and what we learn, coffee, sugar. We're going to go down the line. So, all right, it's great to have you, Ian.
Great to be here. Thanks for having me, Jason.
Of course. So yeah, I was looking at this heat map from All Star Charts, the commitment of trader reports. You guys put those out. Let me share that here. I could share that with everybody as well.
It's a bit stale. I'm sure everybody knows. Stat is a bit stale.
How stale? 110. Honestly, that's where I want to go, and not to mention they haven't been putting it out lately, right?
Yeah, I think 3 weeks.
Yeah,
They haven't
three
put one
weeks.
out in the past
So
3 weeks. Yeah.
not
So
sure what that's all about. That could be a whole other podcast, but we won't get into that too much. But looking at COT data, and the first thing that always has pops out to my mind, and especially because I'm long it, I love the false breakdown signal it gave. It also gave an ad signal when it broke out of that kind of bearish flag thing it was making. So it had a bear flag, broke down, came back up, broke out again, and that's coffee.
yeah.
So what are you seeing in the coffee market right now?
It reclaimed a big level. I want to say it was around one. I want to say 172. Does that sound right? 174.
Yeah, let me bring it up so I'll look at it too.
That was my level. But when you look at the heat map here, back in early January, commercials were extremely bullish, right? As you can see,
Yes.
it's highlighted dark green. So that's pointing out that they had they were at a 3-year extreme in terms of their positioning, and that's kind of what I look for. I mean, I look for extreme levels, right? That lets me
Yeah.
know that they're extremely bullish, right?
Yes.
Um, so
So
yeah,
yeah, it did
that was a
break
signal.
down. It
Yeah.
broke 150, which was a big level, and there was a lot of resistance there for a long time. We kept
Mm-hmm.
bumping up against that level from all the way, basically from 2017 all the way through 2020. Finally broke out of it. I remember that was into 2021, and we took off from there. Then finally it gassed out, crashed down, came into that level of 150, broke through it very briefly. For me, that's my favorite type of a signal, which it was, false. That's the thing with technical analysis. It's always interesting. People are like, oh my God, like, I put this trade on based on this pattern and it didn't work out. Like a head and shoulders is supposed to go down and an inverted head and shoulders is supposed to go up. It's like, no, that's not how you look at these things. Sometimes the information is in it broke down, but then it reversed up. Sometimes when it reverses and breaks up through that level, so it basically broke down from 150, came down 145. This is the continuous contract, and then broke back up and just trended higher. Like that's a huge signal. XBI 2020, which is biotechs, I remember in 2020 that was kind of the signal to get long the market that came in before the election, and all these things kind of show that. But I love those false breakdown patterns.
Yeah, absolutely. Sometimes they're messed, right?
Yeah.
It's even better when patterns fail, when everyone thinks they're going to go one way and then the head fake it and throw it the other way, and those moves can be strong in the
Yes.
opposite direction. So yeah,
And I
and
can
that's what we're seeing in
promise.
coffee.
Yeah, and I can promise the one thing that people look at, like, I don't care if you tell me you're a fundamental trader or whatever the fuck you want to believe you are, everybody looks at levels. Every single trader in the world looks at levels. So if you're looking at something like, oh, I'm seeing coffee at 150 and it broke 150, there's not only are there traders looking at that, but there's producers, The people who actually are farming and making the coffee, hedging their crops and so on, they're coming in and buying. You know, I even know some of these people, and we talk from time to time because I am hired by those people. And that's also what they're looking at, is going, okay, this is a good level for me to get long. So basically, they're going to do the opposite of what most of the trend traders are going to do, or most technical patterns are going to show you. So they're going to be buying as it's falling because they're hedging their crops, they're hedging the market. They need to be buying as it's low, and they're going to be selling as it's high. You know, that doesn't mean that they're going to catch the top perfectly by any means, or that the bottom's going to come in perfectly by any means. What I think as traders that we should be doing, and the best way to look at these things is to go, okay, we have major commercial buying, which is, you know, we have this 100% on coffee right here. We see this false breakdown. Okay, number two, and then it reverses higher. Now we see an entry point. Okay, great. Then you get long that. So that's combining those two things, putting them together. You want to add seasonals, you want to add whatever the fuck else you want in there, go ahead.
Right.
But you know, just those two simple things are very powerful.
Yeah, I agree. Absolutely. You tend to see that strong buying from the insiders, from the smart money, those commercial hedgers at the bottom because they're accumulating, right?
Yes.
And then you think about it, as a market begins to trend higher, they're net sellers, right? They're going to be feeding the ducks all the way up.
Yep.
So yeah, this is a big signal, you know, and there's a lot of commodities that are at extremes, or near extremes. It makes it so interesting that we haven't had a COT report for the past 3 weeks.
Yeah. That's once again, that's why like I've been talking about that a little bit lately, and I'm like, I don't want to get into any of my crazy ass conspiracy theories about it, like, because I know I will, but it's like that's just kind of weird, you know, very odd.
Yeah.
You know, it's very weird. Sugar being another one. That's another one that's quite interesting. I don't know it. I didn't look at what you guys have first, but that's also on the other side of the spectrum, which did start to break out and move higher a little bit before everything else. You see that the commercials obviously started to sell that position a bit, but looking at it, you know, that's another one that's like, okay, that's a nice pattern coming in here. Basically bottomed in July 22. There was a lot of buying actually in the sugar commercials at that point. Still trending higher. So that's kind of a way of looking at it and going like, that's what we could see in coffee. We could see another trend to the upside, just like sugar. Sugar's trend is not stopping by any means, still moving higher. Didn't open today because of President's Day, but it still looks really good. Another one that I'm really looking at a lot that you do have a pretty big signal on, and it's only gotten crazier since then. And not that we know the last 3 weeks, but after the 10th, and that was cotton. So cotton's being another one that's like, okay, that's, to me, I love the cotton chart right now because of the way it looks. It's accumulating right now. So what we would call that, you know, and I'll bring this over here. I'm just on Coifin. I'm not on anything cool, so forgive the crappy chart from me, guys. But anyways, just looking at Coifin, easy to kind of get a good idea of what the chart is just on there. If you guys don't have Coifin, it's pretty cool software. I was gonna say anybody can get it, but it's not free anymore. Anyways, cotton accumulating. So this is what I call, you know, gaining energy. Any, you know, not what I call, but any technician would say, hey, this is kind of gaining energy here. Now it's just chopping back and forth. You know, we don't want to be buyers right now. We don't want to be sellers right now. What we want to see is, okay, there's a lot of accumulation. And even more so since that report came out. And that means when it breaks to the upside, that's when I'm going to want to buy and be a buyer of it. And, you know, cotton looks interesting. The Chinese story kind of coming with cotton looks interesting. Once again, I'm not much of a fundamental trader, but I try to keep these things in mind. All these things, the supply demand numbers, the crops is something that I do look at a lot. You know, that could be a good catalyst for cotton too. And if we get that break to the upside, that could be pretty cool. But I really like the I really like cotton. I like, you know what, we just went through all the softs, and that's kind of like where we're at. We're looking at these softs, and it's like the softs are looking really good.
They do. The softs look really good. In terms of the grains, I really like the way wheat looks right now.
Yes,
I like
wheat.
wheat a lot. It looks like it's carving out a bottom there. Let's see what happens this week. But it's constructive. And
Yeah. Yeah, I do like wheat a lot. I'm definitely more interested in the spring wheat at the moment, or sorry, KC winter wheat. Mainly most of the time when I'm looking at that, I'm looking at crops in certain areas and what they're doing at the moment. So KC winter wheat looks really good.
yeah, it's had some relative
So
strength
pull
in the
over.
past few weeks.
Let me get this thing to pull
For
over.
sure.
There we go. Okay. You can see that?
Mhm.
Okay, good. All right. And yeah, so what do we have on? Oh, you guys have all wheat on here. That's cool. So Chicago wheat, which is the normal wheat, ZW, being the ticker on futures, is at 89%. KC winter wheat, 69%. Obviously that's why we have to choose that. Yes, I'm 5, it's all right. But yeah, I definitely like the way wheat is looking. I like the pattern of it. I like the way it's holding. I like the supply and demand numbers. I like everything I'm seeing from the wheat market. I actually have some actual other data on it that I was working on by myself, which is that India is going through a multi La Nina transitioning to El Nino right now. So the spring growing season areas for wheat are looking pretty bad at the moment. So this could also put some pressure on the wheat market, and that's overall the wheat market. It's not just one market. It will put pressure on all of them. They're all kind of in a similar pattern, where Chicago wheat is kind of looking more like it's kind of breaking that downtrend a bit more. So this could be a very interesting market to take note of at the moment. Sugar and rice are also in these areas that could be important too. So in India, so we're just seeing a lot of things that are really kind of pointing to either droughts, flooding. Obviously, these are different parts of the world, but all these things will affect crops, and not to mention just the main driver, which is going to be liquidity. Coming into this year, like it looks very similar to me. So if you measure liquidity, there's a bunch of different ways to do it, and everybody has a different way. So we don't need to go into that. But I want to look at the overall accumulation, like how much is actually coming into the market, how much is actually coming into the world. So if we look at it, it's very similar to the Fed in 2017. So in 2017, there was nobody in the fucking world who thought the market was going to go up that year. There was nobody in the world. The Fed was tightening. There was there QT at the moment? I think there was QT.
Yeah.
There was a lot of things going on in the market. I could be wrong on that. I'll double check that before I put this out. But if that's all that all coming into the market, but what we didn't see and what people didn't take note of was China pumping liquidity in the market. And so what we're seeing right now is that, like, even though the US is still technically tightening, we're not seeing that all over the world. We're seeing that they're starting to go the other direction. And as they're going the other direction, oh,
Sorry
that's
about
your
that.
house. That's your house. Well, I have a door over here too. I was looking for me. I was like, oh, that might be me.
No, not yet. Okay, thanks, buddy. All right.
I thought I was behind me at first because we're on the tiny screens, and I'm like,
Yeah.
oh my God, what happened? I didn't know I had one that young still.
That's my son.
But yeah, so basically coming in and look, nobody wanted to look at China. Nobody was like, oh, China is doing all this at the moment. And it's not only China, but it's, Europe, China, because they're, as we talked about inflation, and all the other countries, yes, they got hit pretty badly too, but we didn't take into account like how badly they were doing otherwise. So there was a lot of these countries that were doing pretty badly. A lot of them started to pull back on things. People started to support their own currencies. All of these things started to happen, and money is actually flowing into the market again. It was very negative, but this year it's starting to get positive again. I don't hear anybody talking about that because everybody's kind of on the, well, and once again, and I also know the Fed is the main driver. The Fed is always the main driver. But as they're slowing, and as these other countries are doing these things, and as we're kind of moving this general direction, we have to be open to bullishness. Like, it's very easy to get into last year was really tough. Like last year was hard. So therefore, the rest of the years will always be exactly the same. Like that's kind of how people get a very bearish tilt on their trading forever. I've seen that happen with friends of mine and traders that end up they're born at a certain time. The market doesn't act how they think it should act, so they think everything needs to be bearish. And taking classes from older traders when I was younger, not that I was that much younger, I'm not that old. Jesus, shut up, Jason. Anyways, it's taking classes from them when I was younger and learning how to trade, which was okay. There's a lot more times you want to be bullish than bearish, like just generally, like not talking about commodities, not talking about anything. If you're talking about the market, the broad market, you want to be more bullish than bearish most of the time. You want extreme reasons to be bearish. Like I want extreme reasons to be like, okay, I need to be very bearish on the market right now. I need to be shorting everything. And people who've known me for a while, like, the reason why, I started right when I started my group and everything, most people knew me from being short, but that was also, it was January 2020 when I started that. So when I started that group, so people know that, I shorted oil at that time. I shorted banks. I shorted a lot of things at that time. I was very, very, very much swinging on the short side, and that was it. But that was extreme reasons to be short. Now we're looking at, okay, we saw the October bottom play out that, we talked about before. That was also on my YouTube if you want to go back and check that out. And so we're seeing that October bottom. We're seeing all these things kind of come into play. We're getting into the best 6 months in the market. People love to make fun of that. Oh my God, there is no no, there really is. It's not. And once again, if you're talking about fundamental analysis, and you're going, okay, my fundamental analysis is right 60% of the time. And then you think that, okay, this thing is stupid where people talk about the best 6 months, which is right. I don't know how much that's right, but I'm pretty sure it's over. I know it's over 50%, over 60% even. It's not that that's always going to be right. 60% right does not mean that. But what it does mean is that this is right a lot of the times. You should expect for these things. And that doesn't mean trade on it. That doesn't mean this is the end all be all. This means that you should be open to the possibility of more upside here. That's it. Summers are tough and choppy, but this part of the year usually flows pretty well. Once again, we go back to the original statement we got in March, January, February, March 2020. Yes, I was very short. So it didn't mean I said, hey, you know what? These seasonals are really fucking great. I'm gonna stay long right here. It means that I'm gonna be open to. I see the liquidity. I see the things that I want to see moving up. I see the dollar topping out. I see all of these things kind of coming together. So I'm gonna be open to the market moving up. That's it. Doesn't mean you need to get long either. Just open to it.
I think I got a couple more data points to support that thesis.
Mm-hmm.
One of them is expanding number of new highs on multiple time frames. 63-day new highs and 126-day new highs.
Yes.
So for the market to go higher, more stocks need to be making new highs. They need to be making more stocks need to be making new highs versus new lows, right? And we're starting to see that. On top of that, sentiment is starting to flip. And I know it's really early, but we're starting to see more bulls than bears, at least on the AAII survey for the 2 weeks running, after 45 weeks of extreme pessimism, of more bears than bulls. So the conditions, right? The environment's changing. Talk about seasonality, talk
Mhm.
about, we can add sentiment to that in
Mhm.
terms of just like the
Yes.
environment, right? And then as price starts to move higher, as those we get more new highs than new lows, more stocks are going up, then I think that price is going to act as a catalyst and ignite something that could be more sustainable. And with liquidity, like say liquidity's coming into the market, no one's really paying attention to that. I mean, that's a recipe for a sustained uptrend, right?
Yeah.
And like, you
Yes.
just don't fight that.
Yeah.
Like just like you said, be open to the possibility. I mean, like we were talking earlier before we started recording, and I was sharing with you, it was answering emails from clients,
Yeah.
and it's one of the best practices that I have, because amazing clients at All Star Charts.
Mhm.
They're so incredibly smart. They ask the best questions,
Yeah,
and
you guys have a lot of CMTs that are clients actually too.
we
Yeah.
just have a lot of great clients. And
Mhm.
anyways, I was just responding to an email this morning, and it really made me think, because we were talking, we were talking about big picture intermarket relationships between the major asset classes,
Mhm.
and I was thinking about it, and in mid 2020, right, market comes off of those March lows,
Mhm.
and I mean, talk about an explosive rally for stocks.
Mhm.
I mean, you remember the end of 2020, like everything was going up, even early 2021.
Yeah.
Like you couldn't lose. I mean, you got
Mhm.
Davey Day Trader out there with the green hammer, like stocks only go up,
Yep.
right? Right?
Yep.
And so we had that going on. And then in late 2020, those pro-cyclical commodities really started to break out. Like copper really started to go,
Mhm.
right? Copper got above, what was it, 330. Um, and you just had really strong trends in risk assets. Now, in early January of 2021, I mean, I know you've been a bond bear for a while, but we could argue that that first week of 2021, bonds really broke down.
I'm not a bear anymore.
Well, you're not a bear anymore. Okay,
Yep.
all right, I
Yep.
like that.
That's the
I
thing. I
like that.
haven't. So I think that was the last thing I may have put out in January that I wasn't. I got rid of most of the curve that was on the short side. I do like the idea of a spread trade there, but
Mhm.
anyways, get back to what you're saying. But yeah, I just wanted to add that for a sec.
I guess markets trend,
Mhm.
right? Trends persist, but there's this expansion and contraction, right? Expansion and contraction. We had big expanding trends for stocks and commodities, right? 2020, 2021, it was stocks. And then they kind of it was messy at the back half of 2021. And they
Yes.
really rolled over in 2022, right? For commodities, it was a little bit longer, right? It was pushed back. Commodities continued to really rip into what, early March, April, spring 2022.
Yeah.
It
Yeah.
started to roll over.
Spring.
And bonds had their worst year on record last year, or something
Mhm.
close to it, right? Currency markets. I mean, dude, how did your currency trades last year?
Oh yeah. Yeah.
Unreal, right?
Unreal. Unreal. Yeah. Yeah.
So after periods of strong trends, I kind of expect those markets to settle down. Like I'm not going into 2023 thinking I'm gonna have similar returns trading currencies like I did last year.
Mhm.
Like I'm not gonna crush bonds this year. I don't expect bonds to rip in any direction this year,
No.
right? Yeah, and I look at commodities. I'm like, wow, this softs look really good, right? Softs look really good. Ags,
Really,
you
really
know,
good.
those grains look really.
Really
I like the
good.
way the grains look.
Soybeans.
I like how some of these metals look. Um, and stocks look like they're carving out a base,
Mhm.
right? And they're ready to go.
Yep.
So it's been messy for stocks. It's been messy for a lot of commodities. Now I think it's, you know, in 2023, it might not be until the back half of 2023, but I think it's time for those markets to trend, let currencies, let bonds just simmer down
And
after
they need
last
to,
year.
you know, and things, I think that's the thing that gets, that happens so much that people don't really pay attention to, is the fact that when markets move like that, just like we looked at the cotton chart, at
Mhm.
some point they just need to consolidate, and then they'll gain energy, and
Right.
then they'll start moving. And really, like, you know, the S&P looks like it is gained energy and it is ready to fucking move. Like,
Yeah.
like, but the thing is that I looked at this week, and like when I'm basically the last couple of weeks, everybody who's talking to me is very bearish. Everybody. But I would have expected, after, you know, the S&P moved so much in January and all these things moved so much in January for a 1 month move, of course it fucking gave some back. Like, no
Yeah.
shit, it's gonna give some
Yeah.
back. But what I look at is going, okay, what are all my models saying? Well, my models are all saying that we're moving it back into an uptrend. We're, S&P is bullish. Oh, semiconductors are bullish. That's the thing that I really want to see more than just about anything else. I mean, semiconductors are bullish. That's fucking great. Let me see. I think I also had, yep, banks are now bullish again, you know, and that's a big tell in the market. Our industrials, absolutely, industrials
Yes.
are bullish. Is tech bullish again? Barely hitting it, you know. I still haven't been a bull on tech, but it's really saying a lot that it's getting bullish. It's looking really good.
And
You know,
it's
all of these things look right.
and it says a lot in terms of tech, like how well it's that area of the market's done in the past few weeks, as rates really aren't rolling over,
Yes. I
right?
mean,
And
utilities, you know, held up pretty well as rates, you know, did what they did, and like tech's holding up with all this shit going on. That's pretty crazy, because that's the biggest thing that gets so much by rates. You know, just looking at all these things and going like, ooh, you know, where would I be bearish right now? You know, like
ah,
that's kind of what I try to do when I'm looking at it. You know, if I look just at the S&P, you can, and anybody can do this. You can get a false signal by just looking at the S&P. But if you look at everything else in combined, because I don't know how much I actually just look at the S&P. I don't even really trade the S&P. I really
yeah,
trade the sector futures. And so if I'm looking at all these different sectors and going, okay, well, how's XLV doing right now? Really good. You know, like all these things that are the risk off parts of the market are doing worse than everything else.
mhm.
You know, and we'll bring up the sectors right now in Koifman. That'd be pretty easy. Give me 1 second here.
What's also really interesting is, you know, you're bringing up industrials, you're
Ooh,
bringing up
industrials,
financials, and then
materials.
material. You look overseas, CAC 40 index, France, new all-time
Mhm.
highs.
Yep.
You know, the Copenhagen index, new all-time highs.
Oh, these are the world indices look fucking great, but
Right.
nobody's paying attention to it. They're stuck here, like in the US, and going like it's the end of the world. And it's like that's how the world looks bad. Like that's the thing. Like people are always like, yeah, like the best thing, Walter, what's his last name? He has the book that actually on the cover of it is a great line, which is, when the time comes to buy, you won't want to.
Walter Deemer.
Yes, yes.
Deemer,
When the
yeah.
time comes to buy, you won't
Legend.
want to, and that's the
Yeah.
fucking truth.
Yeah.
Nobody, of course, nobody wants to buy right now. Yeah, no shit. Like I get it. Like I totally understand, but that's also the scenario. And I'm not saying like you're gonna catch a bottom. We're not saying that. I'm not saying buy as it's crashing. I'm not saying that. I'm saying it's basing right now, and you're getting breakouts and you're getting buy signals. Like, and probably a good time to take a shot at it. Doesn't
Yeah.
mean that like trading is not 100% thing, but taking a shot, you know, putting a nice wide stop on your small position and letting it run, like, makes a lot of sense right now,
Yeah.
especially as all of these sectors that look like shit are, you know, or sorry, those sectors that look like shit are the risk off sectors, and the sectors that look good are the risk on sectors. Like that's as good as it gets in this. We don't have any better than that, honestly.
Hey, to play devil's advocate real
Mhm.
quick, in terms of, not buying something that is crashing, what do you think about Natty Gas here?
I wouldn't buy it.
Yeah,
No,
right.
no, like no.
I wrote about that the other day. I was like, this isn't something that I would buy.
Last year was very
But
like there was a lot of times throughout the whole year that was like, oh, but I think the thing I try to explain is like natural gas is extremely volatile. So
Mhm.
my positions are really, really small. My stop is really, really wide. But when that fucking thing gets hit and that changes trend, I do not touch it because commodities are a much different animal. I think people don't understand the difference in commodities and stocks. So commodities, for example, here's an interesting system. I've probably talked about this before. Other people might know this, but you're going to hear it again. So, anyways, if I want to create a system, day trading system, the first day trading system I ever created was very simple. 4 days down in the S&P 500, and then I would sell, a spread basically to make money if it goes up or stays the same, just below that 4 day down part, and let that run. Now that system is very profitable. Like you actually make money on that. I think it's like 72% of the time. That's a very high win rate for a short-term system like that.
Mhm.
Anyways, that same system in the commodities like oil or natural gas or whatever, 4 days down is usually the start of a trend. So like you're gonna get fucking blasted if you do that same thing. So it's like for me, once these things shift, as much as like I'm like, oh my god, like natural gas was just $90 billion, now it's two, it was what, 10 and now it's two. Like that's a huge drop. You would think it couldn't go further, but it absolutely can. And it
Yeah.
absolutely has been, and
Yeah.
like it's last year we had some really, really good trades in it. The last couple years it went really, really well. But once the last trade I think I had in it was gave some back, and that was it. That was the end of it. So it's like you have to, especially as a trader, you have to go, okay, like where every system I have is usually like there's some filter of going like I'm not gonna buy that anymore.
Yeah.
Like, and that could be simple. Like a simple way to do that is like, okay, well, I have a chart of utilities up here because we were just talking about those sectors. Utilities, for example, I'm not gonna buy utilities when they are under the 200-day moving average. Something simple like that can
Mhm.
save your ass. So natural gas, like, that's not my same system for natural gas, but for example, if natural gas, like, I'm not going to touch it unless it's over this. I'm not going to touch it unless it's making a 50-day high. Like, whatever it is, like, you have to have that on top of, like, why do you enter the position?
Right.
Like, do you enter the position on, are you a mean reversion trader? Meaning, like, are you looking for a pullback, to the 50-day and then a crossover the 10-day to give you a buy signal? Or are you a breakout trader, trend following more style, where you're looking for, a certain amount of day highs, a hit of the top Bollinger Band, top of the Keltner channel, whatever you want to say. And once you define that, then you can put okay, well, I'm not going to buy it unless it's doing blank.
Right.
I'm not going to touch it unless it's doing blank. Now, you can also out filter yourself on things by doing that. And really, like the biggest thing with trading, especially as you learn with is trend following and systematic trading or technical trading in general, is that it's mainly taking your shots and having your confidence up, like
Mhm.
keeping that confidence, like, okay, I've had a bad month, this month sucks. I'm getting kicked in the ass over and over again. You know what? That next signal for, let's say, natural gas is actually, I'm just because it's on my mind, let's say natural gas actually now, after all this shit and after I had that last losing trade in it, now natural gas gives me a buy signal. And I'm like, you know what? That last losing trade really hurt me. Like I'm very upset. I'm not going to do that again. I think the best thing I had ever been told to me is like I fucking can I could get kicked in the head and be up in 5 minutes, and that's from bike riding, basically for me, like I could fall out of the sky and get right back up like nothing happened. Not that it didn't hurt, but it's just like you're doing what you got to do. And
Mhm.
sometimes it's the same thing with trading is like, yeah, that didn't feel good, but if you're going to sit there and sit in that pain, even though your signals, like everybody has different signals, and then that doesn't mean that I'm sitting here and going like the only way you're going to make money is to be bullish right now. Some people will be bearish, and sometimes I'll be wrong, and sometimes they'll be wrong. That's how trading works. But really, if you can continue to have that confidence on what works for you over and over again, and just knowing that that works for you, this is exactly what you do, you will make money. You will do very well over time. But we talked about it earlier. I said that I would rather a trader that has a trader that has no skill and a ton of confidence. I would rather have him than a trader with all the skill in the world and no confidence.
Yeah.
And it's just because that's the thing that will kill you more than anything else. How many people, the energy trade in 2020, I was very fortunate to catch that on the long side. But I also remember a lot of people, everybody, not a lot of people, everybody was like, fuck that trade. All the fundamentals were there. Like if you're a fundamental guy, if you're a technical guy, it was there. If you're a seasonal guy, whatever you wanted, but it was all telling you to buy fucking energy at that point. And nobody did. Nobody wanted to touch it. It wasn't, worth it. There was better trades. But once again, when I had the conversation, they would all talk about 2016. I can't remember the exact year. I think it was 2016, 2015. Let me bring that up because it's an important part of the story. So 1 second. So if we're looking at it here, yeah, that was 2015 through 16. So 2015 through 16, like basically fucking all the way from 14, it just was in a massive downtrend, didn't make money. Probably caught a couple people in this little uptrend here that happened in late 15 to 16. Everybody got beat up again. And then it was years of chop, years of a downtrend, basically, years of shit. And for me, there's two buy signals in that time, two major buy signals in that time. Now, if I wouldn't have took the next one, that was the buy signal that came in 2020, then that would have been, I would have never made the money back on those small losers. So, you want these small losers up here, and you want to structure your losers. I'm just, this, but I'm just going over it for people watching. You're trying to structure your losers so they're losing 1% of your account. That's what I do, at least. Some people do less, some people do more, but they're losing 1% of the account. And the winners, I'm looking for those to make, 5% of the account, like on average. Now, granted, some will make 10, 20, 50, some will make less than that, but my losers always only lose 1%. This way you can be wrong a lot. So if we're looking at that and going, okay, so I lost 1% here, 1% here, and then let me tally up this winner. Okay, where's that? Of course, it didn't work at that point. I tried to get the percentage thing to come up. There we go. Tally up the winner to where I got stopped in energy. So that was a 125% trade, so yeah, this 125% trade that worked very well. That just literally gave another buy signal on, get the exact date. I want to be exact on here. Another buy signal, and that came in October, beginning of October. Obviously, it's just chopped ever since, but that came in the beginning of October. So you have these buy signals that come in, and these sell signals. So it's 125% to lose 1% of the account, 1% of the account, and then gain 125%. And maybe this one loses 1% of the account. Obviously, it didn't make 125% of my account, but I'm saying it's 125% trade. I'm assuming, just generally like that's probably like 20-30% of the portfolio. That's really good. That's a really great trade.
Yeah.
So that's 125% gain, and the next one could win or lose. But once again, it's a numbers game. If you continue to go into each trade scared to take the next trade, scared about all like your losers. Number one, like when people are really like tell me they have a good trade and they're like afraid to put it on, I'm wondering like what their position size is more than anything.
Gotta be high, yeah.
Yeah.
Gotta
Are
be
your
way too-
positions is your position size so high that you're not losing 1% of your account, you're losing 10 on each trade. That only takes 10 trades to go to zero.
you don't.
Like, so you have to be small enough, like if you're, if you have $100,000 account, like, $5,000 position is totally okay. Like, that's a totally fine number, but everybody wants to like, they think what we do as traders is sit in a room and come up with like, here's my stats and here's all my charts and here's everything. And okay, we found out that energy is the one we want to be in. So therefore, we take, if we have $100,000 account, we put all $100,000 in. You know what? Fuck it. We'll throw some leverage on it, maybe some options. Yeah. We'll be leveraged to 200K and 100K, and we'll hope it goes up forever. Like it's just. But then what happens, especially as traders, they're sitting there watching it all day because the money means so much at that point, and it's moving. And every downtick, like you're depressed. Every uptick, you're happy. Every downtick, you're depressed. So of course, at some point, you're going to make a stupid fucking decision and just either pull it out at a bad point, or just stress about it all the time, or let it run up. And when it makes all your money, you're gonna like want to hold on to it forever because it made you so much that you're never going to want to close the position down. And then it's going to go back to zero at some point. What the fuck, like there's a bunch of ways that could go.
Yeah, absolutely. And then, yeah, I think it all comes down to position sizing.
It's more important than ideas.
Yeah, and you want to take as many signals as you can, as you can, I guess, adequately manage.
Yes.
Right. So yeah, you got to be able to pull the trigger. And I sit in front of my computer all day, and I can't keep my quote board up.
No,
it's just that is a recipe for disaster.
Yeah.
So I like
you're asking to make mistakes.
There's certain parts of the day where I'll take 10 minutes and I'll check and see what's going on. And for the most part, I got that stuff turned off. That's out of sight, out of mind, and I'm just working on charts that show price, that closing price from the prior day.
Yeah, that's the most important thing that I don't think people, especially like if you're going through a week and you're looking at the quote board all week and you're doing this and you're trying to do the analysis, like you got your positions up and you're trying to do analysis on the positions, all this stuff will fucking kill you. Like that will crush you. You will be destroyed by doing that much, because you're looking at, you're trying to make logical decisions while you're a logical brain, because it's a lot, there's money up there. Most people cannot look at that amount of money and just think nothing of it. Like there's an emotional connection to it. So as your emotional connection comes in, you're then going to make bad mistakes. But I promise that, the first, we were talking about, a situation I had earlier with a person I know, which is, once money comes into play, it changes everything. But I promise you, if that same person put on positions like on their analysis and was like, you know what, that's great, I did it. Once a position, and you read this over and over again. That's what drives me nuts about this shit. You read this over and over again from every good trader. If you put your position on, like once you put your position on, you put your trailing stop and you don't fucking touch it. Like how many people have said that? Like everybody says that. Like once I do my analysis and the position is on, it is on. Like that's it. Like that's such an important thing to know, because how do you let something like Bitcoin run from 10,000 to 65K if you're looking at it every day like that? You're not. The second it hit 20K, you'd make it, as a technician, you make another bit of analysis. Oh, it's gonna hit this resistance up here, like it's gonna hit resistance at 20K. I need to get rid of this. Or it hits, most likely it probably hits more like 12K, and you're like, that was a good trade, I made 20%, and you're just gonna run, But really, to sit in those positions, you have to have some form of system that you're following, and a trailing stop. And that system can be fundamental, it can be technical, but you have your trailing stop, and then you have, I'm gonna exit if blank happens. That is it. You wrote it in your trading journal, like you write, I'm gonna exit if it makes a 50-day low. I'm gonna exit when it hits the bottom Bollinger Band. I'm gonna exit when I get this crossover moving average. Whatever the fuck it is, that's all you need to be a good trader. That's it.
Yeah. Got to treat it like a business.
Yeah.
And you're just going through the motions. Yeah, and I mean, so many good points. It's just my train of thought. Having something automated. And I don't have anything automated. I need to build something automated. I think that would be helpful. Just whether it's, you know, it not necessarily putting the trades on, but just to have a system. I've thought about it. I just haven't done it. But when you talk about so many traders getting caught up in the moment and caught up to the intraday swings, you know, thinking that, hey, you know, I'm day trade, or I'm swing trading or position trading, but quickly becoming day traders.
Yeah.
I mean, I've been there. Like, I'm like, oh yeah, I'm a position trader. And like, nah, man, I'm not a position trader. I'm a day trader. Like, you know, I learned that one the hard way. And think about the turtle trading story. You know,
yeah,
like
can
Jerry
you
Parker,
teach everybody to do it?
Parker
Yes, you can.
went to the same 2-week class as everybody else. But Jerry Parker's disciplined.
Yeah,
he plays by the rules, right? And that's what it takes. I mean, I'm sure he's the system. He's the first person to say, "Hey, look, it's not rocket science." Like I think he was like 100-day highs, 50-day lows.
Yep.
Like
and you know what? He still uses the same system. He still uses the same systems. The only thing that has changed a little bit is he's gone a little bit more longer term over the years. That's it.
Yeah.
So it's like he, you know, I always say I could put my system on a fucking billboard, nobody would use it. But the thing is, if you can back test and go in and go, okay, well, this system works, you know, this many times, or you just basically, like, let's say you're a fundamental guy, like, write your reasons for entering before you put the trade on, your reasons for exiting before you take the trade off. And then you know that no matter what, I'm not going to touch this. Like, especially as a position trader, like if you're going to trade long like I do, like you have to have that, or like that position will come on and off so many times that you, or you'll just enter a bunch of times. Like it's the death by 1,000 cuts. People don't understand like how badly that shit hurts, you know, like, they talked about this in hedge fund market wizards. Knowing when it's raining, I forget the name of the trader, but it's the first chapter. And he talks about the NASDAQ bubble. And if you look at the NASDAQ bubble, you know what? We'll bring that up. That's a good case study. That's a fun one. Let's do that. I'm gonna bring up the NASDAQ. Give me 1 second.
But yeah, you're talking about earlier. We were going back and forth about the difference between trading and analyzing a particular market, and how some people are amazing analysts.
Yep.
Some people are just amazing traders.
Yep.
Right? Two different hats, right? And you brought up market wizards because I remember a passage in I think the original, and he was interviewing Ed Sakota. Yes. And he was saying, hey, like if you're not good at trading, just give your money to somebody else that is.
And not even, he didn't say not good. He said if you're not passionate.
If you're not passionate,
that's the thing, because you have to be very passionate to want to do this shit, because it's
right. Yeah, so if you don't, basically, if you don't have what it takes to persevere and to become, you know, efficient, then it's okay. Just give your money to somebody else who is.
Yeah, exactly. You know, like, and that's an important thing, because it's just they're just two different things, right? You know, like analysis is one thing, and if you want to learn it, that's fine, but you got to also like understand yourself. If you are you a person who can take hard criticism? Can you deal with that? Can you look at yourself in the mirror? Are you disciplined enough to journal, you know, in a journal every day, and then go back when something goes wrong, go back, like, where did I go wrong, and analyze that shit? Because I'll tell you, that's the worst part of my fucking shit, is to go, Cool. I did my shit wrong. Because there's never a time in trading where you're like, oh, I'm so many years into this, I don't fuck up anymore. Like it's just no, you're gonna fuck up still. You're still going to fuck up, but the only difference is, can you learn from that?
Yeah.
Can you continue to do it? And over the years, really what sets professionals apart is more like you're better at managing those mistakes. Those mistakes aren't detrimental anymore. At the beginning, those mistakes are why people blow up.
Mhm.
As you get good at it, it's those mistakes are smaller and smaller and smaller, and you can learn from it.
Mhm.
Okay,
There's
I got
it's
the Nasdaq bubble.
what's I've run into is that like a number of different like emotional kind of biases and how they can present themselves in different scenarios, right?
Mm-hmm.
So different mistakes they keep coming up, but they have similar roots, right?
Yes,
Journaling helps a lot with that.
extremely.
Yeah.
And like I think that's the thing. Like in life in general, it's you continue to find that you and can analyze yourself and listen to yourself and understand where you went wrong, and really like not only own up to it, but I'm not religious really, but the one prayer my grandmother used to always put into me all the time, which is like knowing the things you can change, the things you can't, and having the courage to change the things that you can change.
Absolutely.
And really it's like that's really life, as time goes on, is what can you change, what can't you change, identify those things. Like everybody loves to talk like, oh yeah, I would have bought that if I knew blank, like don't go backwards, you never would have,
Yeah.
that's for sure. The chart looked very different than when you said like I'm sure everybody said, well, these Nasdaq traders, why would they buy this, I would have bought here. Like I'd have bought here. No, no, you fucking wouldn't have. Shut
Do
up.
you see the crossover? I would have been all over that.
Yeah, yeah, definitely would have. Not everybody. No, that's not what happened. But and I'm saying, yeah, like once again, but system wise, like yes, you could create a system to keep you out of it. But if you're just going on gut and intuition, you would have done exactly what these guys did. So what they did was basically, as this is moving up, they're going, oh, buy, yeah, buy, it can't be wrong. And then the bubble came and every buy was working, every single buy. There was 1998 LTCM, the Russian crisis, and there was a little bit of turmoil there, but then you got this, so they were right again, so they could just buy and buy and buy. And then what happened was they would buy here, but they were disciplined, so they would get a small stop. So let's say they bought here, they sold here. Okay, that happens once. Then you buy here, then you sell here. Okay, it happens again. Then you buy here, you sell here. Now to mention, this is a quarterly chart, so this is, there's probably like 20, 30 more trades in here to do, but I'm just giving a basic overview.
Yeah.
So they're getting chopped to death on the way down this thing. This thing fell, what was it? I feel like it's 80%, yeah, 84%. So, they're getting chopped to death on all these trades. Every single trade was wrong when they felt like every single trade was right. Now, a system could keep you out of that and tell you not to buy it. But once again, if you're going on intuition and gut and you just made all this money all these years not doing anything but just buying with your eyes closed, like, yeah, at some point you're going to get killed. And I think that happened to a lot of traders last year, is that, they could buy with their eyes closed for so long. And then, they got the death by 1,000 cuts. And now they're going into this year going, yep, never can happen again. Yep, I'm bearish now. Yep, I'm gonna sell everything. Yep, like that's kind of their thinking now. And I'm not saying they're wrong to be bearish. I'm not. Like maybe it's the right trade, but really and I'm not saying I'm on that side. I'm just saying I don't. You never 100% know which trade is going to work out.
Yeah.
But I'm more saying that if you're not following a plan and a system, it doesn't fucking matter, because you can't do it again and again and again. Like
Right.
if you're just going on gut and intuition, like this will happen at some point. Like if you actually have that system set up where you're going, okay, this is why I'm going to get in, this is why I'm going to get out, this is why I'm going to get in, this is why I'm going to get out, then you're going to make good money. But it all starts with having that system and then writing your reasons of getting in and out of the trade. doesn't mean you're gonna make money every day. It's very tough being a system trader because sometimes you're following the system and you're like, I'm just getting my ass kicked, like, and sometimes you think you know better than the system. But what helped me was I was half systematic before I was fully systematic. And I was running system over here, and then sometimes I do my own thing because I'm a fucking genius. Why don't I do my own thing from time to time? So I run the system, try trade, run a system, try trade, and I realized at the end of the year, like my system was kicking my ass, like badly, and like not to mention like my other trades didn't have the right discipline on them. So sometimes it'd be like, oh, it's getting close to my stop, but I believe this is going to happen for these reasons. So you know what? I'll widen that stop a little bit. Or you do all these little things, and then at the end of it, you're like, oh, fuck, like systematizing this would have been much easier. I'd have made more money. I wouldn't have got my ass kicked at these times. So, and not to mention it was still a good year, but I still noticed my system was the reason it was a good year.
Yeah. Can you trace back to like a certain point in your career where you surrendered to your system, where you kind of let go? And I'm sure you still struggle, from time to time, following it. I mean, it's always, you wake up every day, you got to follow that system, right? It's but can you trace back to like a certain point where it was like, okay, yeah, I'm going fully systematic, right? I mean, you do enter your own trades, right? So I guess there is some
It
discretionary.
is fully systematic. It's not, no, it doesn't make it discretionary to enter because you just still follow. And I don't like the only reason why I don't like the putting on the completely automating my trading system is because sometimes there might be something weird in there, like more the order flow.
Yeah.
Or the timing of putting it on, or let's say a system comes today on a President's Day, there's no volume, it's futures. So that's the only reason why. So time frame 2016, 2015, 2016. That was when that happened. It was going through it. Let me see. I need to look at a chart real fast, but I could tell you exactly what happened if I can pull a chart up.
Was it just something that like clicked for you?
Yeah. So getting into, what was it? I think it was 2012 through 2014, I had a pretty solid run. Everything felt right, everything felt good. Half systematic, half not systematic, working well, thinking my not systematized ideas are great. Getting into this area and it's kind of more the area like we're in today. Like there was no real trends in 2015. It was very choppy 2015 through most of 16. And coming out of that base to move higher, understanding that, I could have sat out, not come up with these ideas in 2016. And I had a good year, but most of it was because the breakout towards the end of that year, there was election, it's a big move, big breakout, like that made my year. But once again, it's like I could have sat out or done something different for most of that year, and kind of realizing and looking back and going like, why the fuck am I not using these things? Because really, like, systems are discretionary in one sense, where we do make them, like we make those. So why am I doing all the research to come up with my regime model, my liquidity model, my entries and exits, my fucking sentiment models, all of these things? Like I have spreadsheets on spreadsheets of all these things. Why in the fucking world am I deciding I'm going to come out here and put on a trade? Like I don't know better than this thing I made. And so I think the same thing, like, mine are a little bit more in depth than somebody like Jerry, but Jerry had to do the same type of thing of going like, this works. I know this works over here. I know this might work. Why not do the thing that I know works?
Right.
So I see that so much in young traders, especially, and like once in a while, like Ed Sakota talked about, like I have that like urge to kind of scratch that itch, like, and it's almost like Jason's a play account. Like my clients wise, like I kind of tell them like, hey, you know what? Especially if they're like, oh, I'm a trader, I'm like, you know what? You should take this amount of your money and put it into account so you can do your great ideas. Like really, most of the time they tell me like it didn't work out too well, but it's more for them to scratch that itch. And I think sometimes, like, I'm like, you know what, I need to scratch an itch. Once in a great while, it'll be something where everything in my systems will say yes and one thing will say no, and that might cause me to override. 2020 election was one of those. And the only reason was because I was pulled into a party. This is so ridiculous. I was pulled into a party with some friends. Now, I love these friends, but basically, Biden was going to get into office, and then we were all going to die. Basically, like something crazy was. I can't remember what it was, but like, or on the other side, Trump, if he was ousted, was going to hit the nukes on the way out. And so they were like, all this crazy shit was going to happen one way or the other. I was talking to friends who had funds. Everybody was short. Yep, this is the end. There's going to be, if Trump gets in again, it's going to zero. If Biden gets in, it's definitely going to zero. Like nobody. And then the media ran. I remember these crazy stories at the time about the market going to zero. And there was another one which was like, if Trump gets in, you better buy banks, energy, and something. And if Biden comes in, you better buy tech, solar, and something else. Like you probably remember that. Like those were everywhere.
Yeah.
And it was funny, the fucking opposite thing happened, completely. And so for me, before that time, and it's in my group messages, I was like, and I also, and most of the time, I know what elections are. Like I know that everybody is super bearish, and the second it's done, everybody gets back to normal life. Like everybody gets scared, but what it creates is crazy short covering. So if you look at any of the elections, most of the time you see this massive rocket out of the election. And so for me, like, seeing those types of scenarios where most of my systems are saying yes, but maybe I don't have one, that's something that I might deal with and be like, okay, like it doesn't, I'm gonna put that on still, but that's about it.
Got it. Yeah, that makes sense.
But also, it's some of the best trades I think come from. I don't look for every system to say yes either. Like some of my best trades come from everything saying no and one or two or three things saying yes. Because it's really like simply put, like look at it like price action. Like if let's say you're in a long-term uptrend and you have your short-term uptrend is saying no, that could be your time to buy. Like it could be this mean reversion type of system that you're using. And once again, it's like I use very many different systems. I do, which is much different than most trend followers you'll ever talk to. I use mean reversion systems. I use Bollinger Band breakouts. I use band squeezes. I use Donchian channels. I use all of these things kind of across the board to kind of get me in and out of trades price action wise. And then on top of it, I have my other more, I guess you'd call it fundamental. I don't really think of it that way, but fundamental models that kind of help me as well.
Yeah, I definitely like using mean reversion strategies from a tactical standpoint, buying within a structural uptrend, and
In
vice versa.
stocks,
And
in
vice
stocks,
versa. Yeah.
in stocks only does that work well. And that's the thing that's kind of interesting about it is if you go back and you're like, okay, well, I see all these dips and dips and I could buy this, and you look at commodities, you back testing that a mean reversion strategy, you just get killed every time.
Yeah.
On stocks, the opposite thing happens. You make a lot of fucking money. So for me, I'm not so rigorous with my trend trading that I'm like, oh well, I'm never going to use any of those fucking mean reversion systems because that's not what we do as trend followers. We only use breakouts, like that to me is a little ridiculous. Like might as well. I use everything, but also I'm looked at kind of differently. Like people don't really, and trend followers don't really think of me as a trend trader. because what I think of as it, like they wouldn't use different systems all the time. They wouldn't use, like I'm using one for equities, one for certain commodities, let's say energy based, another one for, let's say, ag commodities, another one for Bitcoin, like all of these different sectors I have different systems for. And it's just because I found that they work well. Like I've done a lot of back testing.
The purists would say you only need one system,
Yeah,
right?
purists would say yes. I buy, well, they use like a couple different systems, short-term based, medium-term based, long-term based. So let's say buying 200-day highs, they buy 100-day highs, and then they buy 75-day or 150-day highs, and then 100-day highs. And then each of the systems sells 50-day lows. And honestly, I just told you the system for like 90% of trend traders. That's literally the fucking truth.
Yeah. But again, as we get back to it, like, good luck.
Yeah.
Good luck. I mean, it takes the discipline to execute.
Yeah, and that's the thing. It's the whole thing where I think that there's many ways to do this. And my way works for me. And I think the 200-day high and whatever works for people like Jerry and other people, and that's great. Talking to someone like Tom Basso, he uses many different systems. He does a little different than me. Like he's more I don't take off my trades or shave my trades as they're gaining. I just let them get stopped out. He's one who kind of I don't know what it's called. Pyramiding is the other way. What's
Yeah, as you take them off as it runs. Yeah.
What's that called again? I can't remember off the top of my head.
We call it feeding the ducks.
Yeah,
basically. Ducks. JC uses that term, and I love it. I love that phrase.
That's true, but
yeah.
I can't remember. Yeah, I can't remember exactly the term, but yeah, that's the one that I don't do that. I'm more of a lead. I don't pyramid either. Leave the position on, it gains and earns its place in my portfolio as a big trade. Great. If it doesn't, that's fine as well. But other than that, he uses a lot of different systems, a lot of different time frames, a lot of different things. So there are some people who do, but for the most part, it's very traditional 200, 150, 100.
Yeah, pyramiding can when not done properly, the positioning gets so top heavy very quickly.
Yeah.
And then everything we discussed earlier about exiting a winning trade too early and all that jazz, and getting caught up in intraday or weekly movements.
Yeah, exactly.
All comes into play, at least in my past experience.
Yeah. I just can't. For me, it's especially in futures, I don't see the reason for it. I saw a trader last year have a really great year, but most of his years are really bad, and the reason why is because of pyramiding. But it's, once again, it's like, okay, that's a huge double-edged sword, like, or like, can you do that? Can you make that consistent? Like, and maybe some people can, like I'm not saying it's right or wrong. I'm just saying that for me, it doesn't work for me. So, all right, I think we should cut this now that we've definitely been on and doing awesome. So I want to say thank you, Ian, for coming on. This is great as always.
Thanks
Hopefully
for having
you
me.
can't hear my
Absolute
dogs. All right, man.